Bloomberg Audio Studios. Podcasts, radio, news.
Let's bring in Ross Gerber. He has thoughts on both of these companies. He's president and CEO of Gerber Kawasaki Wealth and Investment Management. They've got about $4 billion in assets under management, and he's with us from, I bet, lovely Santa Monica, California. How warm is it by you?
75 and sunny. I'm right next to the beach too, so I don't want to rub it in.
All right, that's enough, Ross.
All right.
We're moving on.
We're done with you. No, we're so glad to have you here.
You asked.
I know. I'm a sucker for pain here. Hey, what story's more interesting to you, Ross? Is it Tesla and the possible combination of SpaceX, XAI, or is it Disney?
Well, the Disney story is a little bit sad for me because I'm just like, I've owned this company for my whole life, and Iger's done a great job sort of refixing the business and getting good movies back in the theaters and such, but they just can't seem to get the momentum going, and the valuation for Disney just makes no sense. It's so cheap relative to what they're willing to pay for Warner Brothers assets, which are garbage compared to Disney. But they just seem like maybe this company needs to be broken up.
Wow.
And that's part of it.
What does that look like? What does that breakup look like, Ross?
Well, see, Josh and Dana are both great executives. So like they have, like the fact they have to pick one is the problem, because Dana runs entertainment and Josh runs the theme parks and all this kind of stuff. And they're just completely different businesses with different skill sets. And maybe they should be co-CEOs, even though I hate that formula for businesses. Disney's just, the parts are worth more than the whole. And we've waited 5+ years since the pandemic for them to do something good, and they haven't. So it's time for change at Disney, and I think it's breaking up the business and spinning off ESPN.
Would that be the only thing spun off? It would just ESPN would be...
No, it should be 3 companies is the way I see it.
What should they be?
Yeah. Well, you have theme parks, resorts, and experiences with the cruise ships as one, and then you have, your streaming business as the other, and then you have ESPN Sports as the third, right? So you have entertainment that's non-sports, and then you have a pure sports play, they just sold 10% to the NFL.
Would that work with all the cross-pollination that happens these days? Like, you go on a Disney cruise, and the Disney IP is everywhere. You go see a Disney film, and if it's a popular film, that ends up becoming something that is an attraction at one of the park and resorts. It's supposed to be this virtual cycle that for years worked out really well. Could they still do that as separate companies?
Yes, and I think it still works now that way, but like explain how the sports business really matters when it comes to going, on a cruise. It's nice to have ESPN on the TV there, but there's no relationship really. So I get when you're making a movie, you want it to go through the streamers, but I'm saying keep that all together. And then they license all their IP to the theme parks and resorts anyway. So it would just be an exclusive licensing agreement. I think it's actually quite simple. I think the real issue is extracting value from the very valuable assets and IP that Disney has, while everybody's fighting over crappy IP and assets. Like Disney has the best assets in Hollywood. So, I don't know. I just don't think they have a future. The market's saying like, wait, we don't see this future that you're making for us. Iger's ready to leave. So I actually think this story is pretty interesting because, the entertainment business is never going to be the same after this merger goes through. And I don't know what it looks like on the other side.
One more company.
So Disney can...
One more. I just want to ask you one question. No, forgive me. I broke in on you, but I do wonder, Ross, go back a few years, and I remember doing this deep dive on Disney and talking with Bob and all the executives, and just this whole idea, like Tim said, this cross-pollination, and people were
This was before Bob left for the first time.
Yeah, right, exactly. And, people talked about the value of ESPN, like that's the value of the company, but it sounds like there is value in a lot of parts today. And hence why you would argue for breaking it up into 3. Is that true?
Yeah, I mean, I love the parks and resorts and cruise business. I mean, that business is killing it for them. It's tons of cash flow. Like, people love the cruises. They just launched a few ships. They've got a great business there. I love the streaming business. They finally, once they get this all under one roof under Disney Plus, Hulu Disney Plus is a great streamer and a real competitor out there to the other streamers. And then you got ESPN, which is now like dominating sports again and really has a piece of every major league out there from a broadcasting perspective. But ESPN financials don't make any sense next to the the cruise ship financials, because ESPN loses money having these big events, that we all want on ESPN, and they make money when there aren't big events, actually. It's kind of a weird business. So they just don't complement each other, and you saw it in the earnings report, which was generally a very good report for Disney, and the stock gets hammered because when you look at all the moving parts, it's never consistent. And so I just think if they were able to prove that these assets, I think, are worth closer to $150 a share, and that's what it was trading at, then I'd say I wouldn't be saying this.
Yeah.
But at $100 a share, you got to break up this company and find value for its shareholders after 5 years of waiting.
Okay, Disney down 7.4% at 104.43 right now. In your view, the move to break up a company into separate parts, to combine a company in two different companies into to one company.
Right.
Let's talk a little bit about Elon Musk being in advanced talks to combine SpaceX with xAI. This according to people familiar with the matter. You had a really interesting comment out on social media earlier today. You wrote, X was out of money, merged with xAI. xAI out of money, merged with SpaceX. SpaceX out of money, merged with Tesla. When they are all out of money, ... You obviously are not a fan of this idea.
No, it's not that. It's just, first of all, you're saying Elon Musk's in talks with himself? Like, who's he in talks with? I don't think Elon Musk talks to anybody. He's going to do this. So he's going to merge all three companies because he has to, and he needs to, because Tesla has $44 billion on the books and they need the money. And every one of his projects is well out into the future. So I'm not going to tell you whether I think all these ideas are going to work or not work. I don't bet against Elon. I think that's up for the future to determine, but all these businesses are incredibly capital intensive with very, very questionable profit margins or even viability. Like data centers in space is not a viable business. Let's be real. It's very expensive to build a data center on Earth. Now imagine putting it up in space. Like, this is just, we're getting into this level of absurdity. So that's why I put it out there. Like, what happens next? So I've got like 18 projects that are incredibly capital intensive. Will people just keep giving Elon Musk money forever? But a lot of it's the same people who he's made money for, just giving him back the money they've made for the next project. And so that's why I put the ... It's like, well, what happens when this all comes together? Because that's what's going to happen. It's all going to come together as one. And then what happens to that business looking forward? They'll have to raise money. And so that's what this looks like in my mind as we go out over the next 12 months.
As an investor, you have invested in shares of Tesla. You buy and sell. You've done that. We've talked about that a million times. You own Tesla cars. What is it for you that you need to...
I own X too. I own xAI too.
That's right. Okay. So I'm just curious. So you obviously like what, a lot of what Elon's doing. What is it that has to happen that makes you say, I'm done?
No,
I'm out?
Please don't say that I like what Elon's doing. I actually abhor him. Okay. He's doing horrendous things that I don't agree with at all. And I want to make that very, very clear. On a personal level, I think his behavior is disgusting. Okay. And I think his viewpoints are disgusting, and he's destroyed the brand. But he is one of the greatest engineers of our time, and he's a great inventor, and he's built a lot of amazing things. So I don't discount that, and I'm invested in that. But that said, at some point this all has to come together and actually work. And that's, the big question. So I don't bet against Elon, and I am sort of betting for him, or I actually, what I say is I bet with crazy people sometimes, and that's worked for me over my life. And, so I have a certain bet with him, and I think he's crazy, and maybe he pulls this stuff off,
Yeah. So you're willing to make the bet on Elon still. Just got about 15 seconds.
Well, look at the other side of the coin is you have Tim Cook at Apple who won't do anything. This guy is so risk adverse, he's scared to get in the water. You know what I mean? And so like Apple's just sitting on the cusp of the AI revolution, like with binoculars going, who do I pay next? Because I haven't done anything. So, you have Elon on one end of the risk spectrum, and you have Tim on the other.
We got to go. Always love talking with you, Ross Gerber.